Hey everyone, good afternoon. Thank you for joining the session. My name is Brian Minotti. This is just a sound check. We are a minute away from starting. If you guys could say hello in the chat so I can know you can hear my voice clearly, we'll get started. Thank you. Okie dokie, let's get started. I see we have a few familiar faces here. Thanks for joining again the session. My name is Brian Minotti. Welcome to the AutoUFOs Get Together Vitamin T series, where we cover very specific topics on trading and help grow our trading day by day. I see the title here has a mistake. Let me fix that. Today's lesson is going to be on risk management. Okay. One of my most passionate topics, mostly because I've made mistakes myself with it. When I first started trading, I got really excited about different assets, especially futures and the power of leverage within futures, but I didn't fully understand it and ended up losing more than I was comfortable with because I didn't fully study and practice it before going live with the trading. So hopefully you can learn from my mistakes, which I will try to be very clear in the next couple of videos as we discuss risk management. Let's start with the disclaimers. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradective provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okie dokie. If you're interested at all in acquiring our indicator, you can go to www.tradewithufos.com/bb and you'll be guided through a two-step process on signing up either through TradingView or TradeStation. It'll help you in finding buying and selling opportunities mechanically. So make sure you check it out. Follow us on YouTube here on a weekly basis. I personally do it twice per week. So we'll be glad to have you here and help gain or increase your education in trading and stay sharp out there. So risk management. Today's outline is going to be a quick revisit on what leverage is, and then I have here the futures leverage. So going deeper dive. I know I've covered some of this and actually I think the first video I've done with you guys, but here we're going to go into a deeper dive on the different leverages, values, and increments, etc. in futures. And I also have listed here the Forex leverage. If anyone can help me by typing in the chat what asset I'm missing here that we should be covering in the future, let me know. I'll be talking about that later as well. Today we'll probably only have time to cover the futures leverage portion. It ended up being a lengthier topic than I expected, so I might squeeze in an extra session this week so that we can cover everything that I have planned for. So quick revisit on what leverage is. Well, let's start with what is an unleveraged asset. Remember, stocks have no leverage imputed in them. So Amazon just closed today at $1,808.21. Okay, so at the close of today, that was the value of Amazon. If we were to buy one share of Amazon at that close, we would have to have $1,000, $808.21 in our account in order for us to be allowed to make that trade, because we have no leverage. We need the exact dollar amount that we're purchasing to be in our account at the time of purchase and from then on. Okay, so no leverage for stocks, and the stocks increment in pennies. So if it were to increase by a penny so $1,808.22, then our account also grows by 1 penny, okay? And vice versa. So if it decreases by a penny to $1,808.20, then we lose a penny, right? So if we want to improve that, we can use leverage, because it allows us to control more money with, well, larger positions with less of our own money, okay? And that is very good for a trader, because gaining a penny per time on $1,800 is not a good stock to really hold if we're trying to be active. Okay, futures. So we have some nuances to cover here. I think I've covered some of this in the past, so I want to go quickly over the first point here. Price moves in incremental values called ticks, okay? So a tick value changes per contract. How much a tick is in cents, as far as what the contract size is, depends on the contract. And also the dollar value per tick varies per contract, okay? This is very important. Not every contract that you trade has the same dollar value, especially related to the contract value of the tick. So let's go through a couple examples here, and then we'll even pull up the live charts so we can see what this exactly means. So I have here the TradeStation description of the S&P 500 mini contract, okay? The symbol root is ES, like we've studied in the past. Let's skip for now the margin requirements here. I really want to focus today on ticks and the dollar value of the tick values, okay? So tick for the ES is in increments of 0.25 of the contract. So I pulled today, maybe about 2 hours ago, what the value of the SES was, and it was sitting at $3,003.50 on that contract. The value of the change of that tick, or the change of that tick, can only increase by 25 cents of this contract, okay? So it will only go up in value to $3,003.75, or go down in value to $3,003.25, okay? So there's no in between there. It jumps in a tick value of 25. So if I say it increased by 1 tick, that means it increased in the ES contract by 25 cents. But what does that mean to your money, right? So you're investing in this, and let's say you own this stock, this one contract at $3,003.50. It increased from that 50 cents to $3,003.75. Does that mean that you gained 25 cents in your account? No. The important part is that now the tick value change has a different value in your account money, right? So your value that you gained in this 25 cent increment in the contract, which is 1 tick, was $12.50, okay? That's the power of leverage. We are gaining much more than the tick value of the contract itself. Now, of course, this goes against you, so you have to be careful in these assets. It decreases by 1 tick, which is the 25 cent contract value, but the dollar value, if you've lost $12.50 in that tick, okay? So you have to carefully calculate your values in ticks and convert that to dollar values in order to understand how much you're risking in each contract. So like I mentioned right above, this changes per market. So here's a similar market, the NASDAQ for the ESE mini. I'm sorry, for the stock, for the futures E-mini NASDAQ. It has the same margin requirements, and you'll look, it even has the same tick values, right? So again, that tick value means the contract increments up or down by 25 cents. So in our case here, a couple hours ago, it was sitting at $78.67.75 cents, which means it can only increase to 78.68 or decrease to 78.67.50, right? Now, the only difference here between these two is, well, of course, the value, the number value of that contract itself, but the dollar value per tick changes. Instead of being $12.50 like the ES, it's actually $5 per tick, okay? So you're gaining $5 or losing $5 per increment of the NASDAQ, whereas the S&P contract, you're gaining or losing $12.50 per tick. Okay, so this is very important because whenever you're calculating your risk, you need to do the conversion depending on your market. Okay, so another quick example, same type of market is the mini Dow Jones. Similar route is YM. We've covered this in the past. The margin requirements are a little bit different. Again, we're not entirely focusing on that, but it's important. So keep that in mind when you're trading on your own. But here, the tick value is a full dollar. Okay. So a couple hours ago, the Dow was trading at 27,123. It can only go up by dollar, so it doesn't have cent increments in it. So it'll either go up to 22 or up to 24 or down to 22. Got it? Now the tick value of that dollar is $5. So the tick value of the Dow is the same as the tick value of the NASDAQ. So you're gaining and losing per tick the same amount from the YM and the NQ. But remember, the ticks themselves are different values. So one of them's a full dollar and the other one's a quarter, right? This might sound a little bit complicated, but once you start practicing this, it's really, you'll really get familiar with all these different markets that you're trading, and you'll understand better what these different ticks are and what the values are. But make sure you study it and practice it, preferably in a paper account. That way you understand what these different increments mean. But here are the tables for these cases. Study them, keep them in front of you, and use them to calculate your risk. Okay. So finally, one to kind of throw a curveball here is the euro currency, right? So euro currency futures is the symbol EC. It has, again, different margins, and notice the tick value is very different. So tick value is 5 10,000ths of 5 10,000ths. And so here was the value of the EC currency contract a couple hours ago. So $1.10770. Now you notice that this has 4 zeros and a 5, and here we have 4 digits and this 0. So this last digit is always going to be a 0 or a 5, which means as we're increasing by 5 in this last digit or decreasing by 5 in this last digit, we're changing by a tick in the contract. But how much does that affect your account money? That you can check by the value of that tick, which is $6.25. Okay, so a little bit of a different one. Currencies are that way, and you just have to, again, every market that you're trading, doesn't matter which one, as long as you're looking at the tick value or the tick change and the value per tick, you can calculate what your risk is. Okay, so let's go into a few. I just pulled up you guys, so you're going to see a little bit of a loop there. But let's pull up TradingView. And we'll look at a chart. And right now I have the a Forex pair here. I don't want to show that yet. That's a topic for the next session. So I want to pull up a futures contract. I want to use something that's we haven't used before in these couple examples. Actually, I'll pull up one of them that we used in the previous example. So let's look at the Dow, right? How do I look that up? I just type YM and make sure I'm in futures here. You'll see it shows E-mini Dow, and I want, let's say, the continuous contract here. So I am in a 2-minute chart. I want to, just for the example right now, increase this to a daily chart so we can get a bigger view. And I'm going to turn off the UFOs just so we can study just the charts, just price action. So here are daily changes in the Dow futures, right? So we can take any day here, and let's start maybe this one here where it increased quite a bit. I'll just make some horizontal lines here so we can study this. Of course, it didn't make the line for me. There it is. So this Dow futures contract changed this day from this low value of 26,366 all the way up to 26,695. Okay, so let's pull up some calculation here. 26,366, and it was 26. I'll have to double check what that number was. 695. So, oops, 695. So Google will tell me here what the difference is. So that contract of that Dow changed 329 ticks. Okay, very simple because each dollar, again, let's pull it up. Where did it go? I want to make sure, show you guys a presentation. So each tick is $1, right? So we know that it changed by 329 ticks. Now, how much is that in dollar value? So if you owned one contract at the low of that day and held it up to the high of that day, or the close of that day, how much money would you have made? All you have to do now is multiply this value, 329, by the tick value. Of course, there it is. Sorry, I'm used to coding, so I press space after everything. So the tick value was $5. So I multiply 329 times 5, and there you go. If you held from the open up to the close of that day in the Dow futures, because it increased 329 ticks, and each tick has $5 values, then you would have made $1,645. Got it? So that's the power of leverage. Let's take a look at the Dow ETF, which is, I'm drawing a blank. Give me a minute. The QQQ, I believe. No, that's the NASDAQ. Diamonds, yeah, DIA. Sorry about that. Let me make sure I'm actually in a stock. Yeah, I'm in a futures, so that'll throw me off big time, I think. No, that's good. Okay. Well, I'm kind of throwing myself down a rabbit hole here. Let's just be happy with this value here because it's a little different because that's overnight trading, etc. Let's not confuse ourselves. The point of this lesson is how much value does a tick have per contract in the futures, and we've calculated it here, okay? So you can do this with any market. Calculate the starting point of what that contract value is, and the end point. You can subtract it to get the total change. Make sure you're checking it in increments of the tick value and multiply that by how much dollar value does each tick have. And you will end up with a dollar amount of what that change is, okay? You can do that with any market. So our next session, we're going to be covering what happens in Forex. Oh, one last thing I forgot. There's one last detail here, and that would be that there are also micro contracts available in certain markets. So one example which was released, I don't know, maybe 4 or 5 months ago, was the micro S&P futures contract, and it changes in 1/10 of a value. So this is very nice if you have a smaller account, because each tick or each increment is a $12 value, and for larger time positions that can really take a toll on your account. So if you're on a smaller account, you want smaller changes, which you can use the micro, which is MES. So let's take a look back in TradingView here. So I had the Dow as an example before, futures YM, Dow. Okay, so if I add an M before it, it should give me the micro, which is fairly the same asset. You can see data doesn't go all the way back because it was released back here in May. So there's no data before this, but you can make your trading decisions on the mini futures because it has decades of data, and basing your decisions off of the mini, you can then trade the micro, which is again just an M before the futures name here, and you'll be trading at a smaller position, so 1/10 of that mini contract. Okay, the only downside would be liquidity. So there is different liquidity between the mini and the micros, but from tests that we've done, it is liquid enough to trade. So you guys should be on the good for the micros on the equity markets. Okay. Finally, one last note is that, again, I'm only showing 4 different markets here. We know that the futures have a lot more than just these 4. I am crafting a document to have everything listed. So all the major markets that we are interested in trading, I'm crafting that all together. Once I have that, I'll announce it in a session, and you guys can just email me for the concise document so you can have it in front of you and be ready to do your calculations and for risk management in your trading. Okay, so that's it for today. Again, you can always go to your email and contact me at bb@tradictive.com. If you're interested in the AutoUFOs app, which is an indicator on buying and selling opportunities mechanically, you can go to www.tradewithufos.com/bb, and you'll be guided through a 2-step process on signing up for the indicator there. I look forward to talking to you guys in the next session, which is on Wednesday. You all have a great rest of your day. Feel free to email me with any suggestions or questions, okay? Take care, everyone. Thank you.